Bitcoin crosses $100,000. A comprehensive analysis of market dynamics, institutional influence, and future trajectory. Bitcoin's historic move past $100,000 marks a significant evolutionary step in the asset's trajectory. From its inception as an experimental digital currency to its current status as a globally recognized store of value, Bitcoin's recent rise underscores its growing acceptance as a mainstream financial asset. This analysis explores the factors driving this unprecedented growth, assesses the broader implications for financial systems, and provides forward-looking insights into Bitcoin's role in shaping the future of global finance. Bitcoin's breakout above $100,000 has attracted significant attention, not only as a psychological benchmark but also as a sign of underlying market confidence. Several technical indicators reinforce the bullish narrative. Bitcoin's ability to break above previous resistance at $100,000 represents a significant shift in market sentiment. This area now acts as a key support level, with significant buying activity observed at $98,000 to $100,000. Tools such as the Relative Strength Index, RSI, indicate sustained momentum, although caution is warranted for overbought conditions in the short term. Volume analysis confirms this move, with strong participation across exchanges. A historical precedent shows that during bull market periods, Bitcoin's price action is characterized by rapid escalation, often doubling or tripling in value within a few weeks. The forecast for the current cycle places Bitcoin's next targets at $150,000 and $200,000. The probability of Bitcoin returning to pre-$100,000 levels has decreased. While no asset is immune to volatility, the current market structure supports a strong floor. Factors such as institutional buying and retail FOMO, fear of missing out, provide significant downside insulation. MicroStrategy's inclusion in the Nasdaq 100 is symbolic of Bitcoin's deeper integration into traditional financial systems. This development has broader implications for institutional adoption and market dynamics. The widespread adoption of the Nasdaq 100 by pension funds, ETFs, and index-linked strategies means that investors indirectly gain exposure to Bitcoin through MicroStrategy. This is a significant inflow channel, as index tracking funds are required to allocate to MicroStrategy shares. Increased demand for MicroStrategy shares leads to more Bitcoin purchases by the company. Rising Bitcoin prices increase MicroStrategy's valuation, attracting more investment and creating a self-reinforcing cycle. While ETFs are designed to provide direct exposure to Bitcoin, MicroStrategy's inclusion in a major index achieves the same result by embedding Bitcoin exposure into a broader equity framework. Traditionally, stocks added to the Nasdaq 100 experience immediate price increases due to increased inflows. MicroStrategy's pre-market performance reflects this trend, with expectations of further appreciation as the company's strategic role in accumulating Bitcoin is recognized. Fair value as a game-changer, evolution in Bitcoin accounting standards. Recent changes in accounting rules that reclassify Bitcoin as a fair value asset rather than an intangible asset are transformative for corporate treasuries. Under the previous framework, treating Bitcoin as an intangible asset created significant barriers. Companies were required to write down the value of Bitcoin during periods of price declines without the ability to recognize gains when prices rebounded. This approach often resulted in balance sheets that did not reflect the actual value of assets, reducing their utility in financial planning or mortgages. The fair value accounting approach offers several advantages. 1. Bitcoin holdings can now be reported at current market value, providing a transparent reflection of asset performance. 2. Corporate CFOs and boards can confidently view Bitcoin as a hedge against fiat currency devaluation or as part of an innovative asset allocation strategy. 3. The updated rules will lower the barrier to entry, encouraging more companies to adopt Bitcoin as part of their reserves. The speculation about the possibility of a U.S. Bitcoin reserve underscores the strategic importance of digital assets. Bitcoin-backed reserves could serve several purposes. Enhance dollar dominance. Bitcoin's inclusion as a reserve asset could increase the appeal of the US dollar in a de-dollarized world. A Bitcoin adoption at the national level would send a strong message of innovation and forward-thinking policy. Global trends and emerging markets. 1. Countries like Russia are exploring alternatives to the US dollar, turning to cryptocurrencies and gold. 2. El Salvador's pioneering use of Bitcoin as a legal tender has set a precedent for other countries. Thailand's recent discussions about Bitcoin's potential as a legal tender underscore the growing interest in emerging markets. Bitcoin's dominance in the cryptocurrency market continues to grow, fueled by its status as a major entry point for institutional capital. However, historical patterns show that altcoin rallies are often followed by periods of consolidation in Bitcoin. Key altcoin sectors. Projects like the Ethereum rollup are solving scalability issues, paving the way for wider adoption. Platforms like Xborg and Wilderworld illustrate the convergence of blockchain technology with immersive digital experiences, positioning themselves for significant growth. Bitcoin's hash rate doubled in 2024, reaching unprecedented levels. This growth shows miner confidence and strengthens the network's resistance to attacks. A hash rate traditionally rises before bull runs, reinforcing expectations of continued price momentum. The growing use of renewable energy in mining alleviates environmental concerns, strengthening Bitcoin's ESG profile. Retail investors continue to play a key role in Bitcoin market dynamics. Leverage platforms and derivatives products enable broader participation, albeit at higher risk for inexperienced traders. Crypto debit cards and payment solutions bridge the gap between digital assets and traditional spending, driving widespread adoption. Institutions are taking a multifaceted approach to Bitcoin investing. Companies like MicroStrategy and Tesla are leading the way in accumulating Bitcoin. Futures and options allow for sophisticated hedging and risk management. Bullish market trajectory. Bitcoin is expected to reach $150,000 to $200,000 in the next quarter, driven by a convergence of technical momentum, institutional adoption, and macroeconomic factors. Long-term outlook. Bitcoin's integration into financial metrics and accounting frameworks reinforces its status as a legitimate asset class. Bitcoin's national adoption will accelerate its role as a global reserve asset. Changing global policies could create headwinds to Bitcoin adoption. A slowdown in institutional or retail interest could dampen momentum. Bitcoin's rise beyond $100,000 represents a convergence of technical, institutional, and macroeconomic forces. As the asset continues to mature, its role in reshaping global finance becomes increasingly clear. For investors, policymakers, and institutions, understanding and adapting to Bitcoin's evolution is not only an opportunity but also a necessity. Bitcoin's remarkable surge past $100,000 is not only a milestone but also a testament to its transformative impact on global finance. As institutions increase their involvement and geopolitical shifts favor decentralized assets, Bitcoin's trajectory underscores the growing relevance of blockchain technology. The road ahead is paved with both opportunities and challenges, but one thing remains certain: Bitcoin is poised to redefine models of value, security, and innovation in the digital age. Understanding these dynamics will be crucial for stakeholders navigating this unprecedented financial evolution.